Well, as is the case many times when I make a video about something, pretty much the opposite occurs right after. We've had a couple days of down moves, and the market kind of volatility kind of perking up a little bit. This could be blamed on a number of things. One of them is the job numbers yesterday were not great. Also, it's kind of important that a stimulus deal gets done in the next week. Now, to bring you up to date, if you haven't been following it real closely, we had the government extended funding for another week. Funding was going to run out for the government on today, and that was extended for another week, and giving the Congress time to craft a deal and extend the funding bill further out into January. And you get the sense that it's hard for the current administration to accept, this is like the understatement of the year, but it's hard for the current administration to accept the changing political tides at the moment. And at this, when I say this, I'm not referring to the president. I'm referring to Steve Mnuchin more and Mitch McConnell. There's a lot of name calling on both sides here, but and for me, I have a personal stake in this whole thing because my side job is working for a resort, and so what sort of stimulus they give to individuals affects me directly. So I saw this news story where Steve Mnuchin was talking about, okay, we're not going to do the extra, $300 a week for unemployed, or remember, in the summer they were paying $600 extra a week for people on unemployment. One of the proposals now is to pay $300 extra a week. There's that, and there's the direct payment idea of giving everybody a check for X amount. And Steve Mnuchin had put forward, all right, we'll give everybody a check for $600, but we're not going to do that $300 a week, moving forward or retroactive for people on unemployment. And obviously, if you're on unemployment, you'd rather have the $300 a week because it only takes 2 weeks for that to be worth more than $600 one time. And it obviously costs more to pay a bunch of people $300 a week for a period of time than just one check to everybody, depending on how long that stuff goes on for. And it seems like this may not get resolved until the Georgia elections are over. It's strange because part of the Republican Party was trying to tell people not to go and vote in Georgia in the elections, which is really contrary to their needs. Obviously, they should want people to vote, and so that they can get those Senate seats and keep the Democrats from having a tie or a majority. And so these elements of the party who are only concerned about the president and don't really care about the Republican Party beyond what happens with the president are kind of self-sabotaging. Now, I think people will come out anyway and vote, but there's that dynamic going on there which is not serving the Republican Party very well right now. Anyway, back to volatility. Let's take a look at the charts and see where we are right now. One of the biggest things that has been talked about among my contemporaries this week has been this JP Morgan rating of Tesla, saying it's worth, I think, $85 or $95. That this is a $600 stock, and it seems like one of the most ridiculous things ever. And actually, that analyst is not rated well. There's an analyst rating website. He's not rated well on that site at all. But it's made big waves in the market. This whole saying Tesla's worth, it is way overvalued. From time to time, we have conversations with people about the market and why is it that the market rallies when it seems like there's not great news out there. And one of the reasons for this is that there is money always being created, and I've talked about this before a little bit, but there is money that's looking for a home all the time, and the U.S. stock market has continued to seem like the best place to put that money. And so regardless, people who have money that they got to put somewhere, they're not following necessarily the play-by-play of what's happening in the news cycle every day. That's not affecting their decision, and as much as for somebody who may be just kind of a day trader who's sitting there and trying to see what's going to happen day to day in the market. If you've got money that needs to go somewhere, you're going to put it somewhere, and regardless of what news story came out today. And this has continued to obviously propel the U.S. stock market higher. So we've seen a little bit of a pop up in the VIX. The VIX got down to, I think it printed below 20 a couple times a couple days ago, but I'm not sure if those were real prints or not. We can try to take a look at that for a second here. I'm going to pull up the chart of the VIX. And we can see there's obviously been a little bit of a pop the last couple days. Like I said, the term structure has pretty much stayed in line. This is what I'm referring to here. You can see this print here, 1997. You know, if anything, we've gotten pretty close to breaking 20 here. I don't think 20 is some sort of magical number, but just to show kind of where the low end has been here. We've gotten a little pop in the last couple days. I don't know if this is real meaningful. We haven't had big down moves. It's just kind of like the market's moved lower the last couple of days. If we do go and look at the term structure, we still are in a nice tight term structure here. What's up, Tom? And in a sense, for me, having a position that is based months and months out in VXX, it's more important to me what level of contango we're at than, you know, if the VIX moves up or down a point today or tomorrow. That doesn't really sort of matter to me. I just cling on to the fact that, like, look, we've got 6.7% contango here, and that is going to fuel the move to the downside. It's going to help decay this product over time. So we're coming into expiration, next week's expiration for the futures on Wednesday. That's just 4 days from now, and thus that kind of makes sense. When you look at the futures, you can see that the front month future is hugging spot pretty closely here. In fact, right now it's inverted with spot slightly, but because of the fact that we're right near expiration, it is very close to spot. If we were 2 weeks out from expiration, you would see the front month future being way higher than spot, and the convergence between the two has created a situation where UVXY and VXX haven't moved as much to the upside with the VIX pop as they would have if there hadn't been that space between the spot and the front month futures. So we're still maintaining 6.67% contango right now. We'll see how we end the day. You know, in my mind, it kind of gets marked at the end of the day, but in essence, the VIX term structure is still in a very healthy shape, which points to not a lot of deterioration in this market at the moment. We'll see what happens moving forward. Obviously, the markets are counting on some sort of stimulus deal going through at some point, and we'll see what happens. Really, next week is going to be crucial for that, because the Congress is going to go on break after that, and nothing will happen until January, which would be, I would say, probably upsetting for the markets if we don't get something done next week. So let's wait and see what happens with that. In the meantime, predictably, Tesla has rallied after that news with the I don't think you can call it a downgrade, because I think they actually upgraded it from a much lower price, but let's just say the bad rating from JP Morgan. Tesla indicated a little down now. Nikkei was down overnight, and we see the VIX up 1.35 points, and VIX futures also up, with E-minis down 22, NASDAQ down 73, and the Dow down 126. Now, this stuff could all turn around very quickly if we get some positive news from Congress, but I believe the market is really watching these negotiations about the stimulus right now. And the market kind of reacts to different things at different times, but it really kind of feels like it's focused on this particular event right now, which is the Congress talking about the stimulus. I just have maintained my position. I haven't made no moves. Just I am still long September 10 puts in VXX. Let's see, we've got 280, I think, 3 days left on these, so, or 280 days, so plenty of time to go. And that's kind of where we stand. I hope to come on Sunday and talk and do the Sunday when the market's open at 6 at night, Sunday night. So join me then, and until then, best of luck trading today, and hang in there if you're short, because I think we're going to continue to move lower. We're just kind of in a holding pattern here, but at the same time, we are in contango, so stuff is decaying all the time, which is a good thing. All right, well, thanks for watching. We'll see you next time. Let's see. If rating far enough off, could it affect JPM rating? I mean, people are pretty... Hey, what's up, Santiago? People are pretty skeptical of ratings from these firms anyway. So I don't know how much people put, stock people put in this stuff. I don't see JP Morgan's reputation being affected by that, but it's just kind of bizarre that they gave that kind of rating. SD Investing, ciao, come va? So I watched this great, you guys got to check out this great series, Italian crime series I've been watching called Gomorrah. And there's another series made by the same guys called 000. Pretty interesting stuff. Anyways, it makes me long for my roots in Italy. I want to go back once this virus thing kind of slows down a little bit. Great to see everybody, and I'll see you next time. Thanks for watching. Hey, Rob.